Hello, my name is Pauline Blanc, and this is Developing Carbon Stories, a podcast about product developers developing the most innovative and impactful carbon projects around the world. Developing Carbon Stories is a project by Abatable, a carbon procurement and intelligence platform that enables companies to purchase high-quality carbon offsets. During each episode, we speak with an entrepreneur from a different part of the carbon ecosystem and talk about their journey so far and how they are acting on climate change. On this episode, we are speaking with our very own Maria Eugenia Filmanovic, co-founder of Abatable. We discuss our annual carbon product developer ecosystem report and what the growing ecosystem of projects means for efforts to tackle climate change.
Maria, thanks so much for joining me on today's bonus episode of Developing Carbon Stories. Thanks for joining.
Thank you, David, for having me.
And today we're going to talk about Abatable's recent report called the State of the Carbon Developer Ecosystem, the 2023 edition. Why don't you talk us through why Abatable decided to publish this report in the voluntary carbon market space and why it's important?
Fantastic. Well, thanks so much again, David. As you said, we've published a recent report. This is the second edition of the State of the Carbon Developer Ecosystem, talking about key themes and trends we've observed in the voluntary carbon markets in 2022. This is coming after our successful release of the previous report, inaugurational one, that we published last year with over 1,000 downloads from the entire community, predominantly developers, investors that are really interested in this theme in particular. I'd say, unlike other research reports, we've looked at the voluntary carbon market through the lens of the developer themselves, so putting aside any sort of project or registry-specific profiling, which we've seen from other reports. And we've leveraged data from main registries, ACR, CARB, Gold Standard, Verra, and used, most importantly, some of our proprietary data as we engage constantly with developers on the market.
Yeah, wow, okay. And that seems really interesting. And so what were the key themes that the report touched on?
Yes, some of the key observations as we saw that this market really evolve over the last 2 years or so are, firstly and foremost, we've started to see the first signs of developer ecosystem consolidation. And what we mean by that is the observation that despite the developer ecosystem is highly fragmented, i.e. there's very few large players and a long list of very small regional players, for the first time we started to see the signs of a consolidation. How we've measured that is by looking at the percentage of historical issuances in the top 15 developers across all project types. And what we've seen is that there's been an increase in the percentage point of historical issuances in the first few names. Why has that happened? Well, predominantly because of the merger and acquisition activities that were started to be announced in 2022. And certainly the percentage of historical issuances are likely to grow in the top 15 names in the space. Some of the notable transactions that have happened and mergers that have happened include South Pole, which is, per our ranking of top 15 developers, top 3 in our list. They've increased substantially both their number of issued credits, but also number of projects. And that came from the back of an acquisition they've done of, in particular, Italian-based developer Carbon Sync. The other one we saw was the acquisition of Mitsui, global forestry developer and investor New Forest, which is a US-based investment platform. And then also a lot of activity coming from a new environment, which has merged with, which came from on the back of a merger that TPG, which is a private equity firm, arranged between Blue Source and Element Markets, which are very major US developers. So this is the first theme.
And is that trend of consolidation, is that something we're expecting to see continue this year and next in the future?
Yeah, I think we're going to see some consolidation for sure. The market is highly fragmented, as we saw, and so there's an opportunity to build market share as developers think about, establishing presence in key markets, whether it's US or emerging markets. And certainly we've also observed a drive to try to build regional or global portfolio. So a lot of developers historically tended to be country-specific, and now there's an opportunity to build scale at a regional level and diversify portfolios.
But of course, there's also been a bit of a trend in expanding the developer portfolio as well. Could you talk a little bit about that?
Yeah, exactly. So that's the second theme that we picked up as we looked at the data. So certainly we've looked at the expansion of portfolios. The trends that we've observed is a migration from country-specific to global players. So from an expansion, as I said, of portfolios that matter. And also the other thing that we've observed is the fact that new players coming onto market, and we've assessed that roughly 180 new developers were added on registries in 2022. They themselves have been coming to market with an average portfolio size already of 2.8 projects. So that means that whoever is coming, a new entrant, is already thinking about the portfolio approach and not single individual project.
And so is that an increase in the average number of projects that we saw in the last developer ecosystem report?
Yeah, of new players for sure. What we've noticed is also the fact that a lot of those new players, they are getting more financing, and so I think they've been re-upping their ambition from the start, which means that the portfolio approach is something that they start with, and it hasn't historically been the case.
Yeah.
Historically, a lot of people were focused on building pilot project, countries focused, proving the concepts, and then raising after that.
And so as they're developing these larger portfolios, moving into multiple regions at once, are they also diversifying the project types that they have in their portfolio?
To a certain extent, yes. It's something that we've seen, still connected to perhaps the key theme, i.e. nature-based. Perhaps if you think about nature-based developers, they might be thinking about, soil carbon project as well as reforestation. In some ways also projects that were historically looking at renewable energy are now moving into nature-based, given the bias preferences that are driving future demand expectations. The other things that we've noticed, and one of the third theme that I wanted to touch on as well as part of this report, is the fact that we've seen a huge amount of new projects coming on, specifically in the sustainable agriculture theme. That came on the back of potentially a lot of conversion of CDM project, or Clean Development Mechanism, that are now transitioned temporarily into the voluntary carbon registries. And a key thing that we noticed was a list of Chinese developers that had portfolios of rice emission management project that got converted. And so certainly that bumped a lot of this new entrants data that we've looked at. And a lot of financing activity went into cookstoves developers, substantial amount. Some of the largest funding transactions that we've noticed went into expanding portfolios of project developers like Sequest, Up Energy, Burn Manufacturing, which secured extensive amount of funding in 2022 to accelerate growth.
Yeah, and that's really interesting that you touch on that. I mean, another thing I noticed in the report, it touches on the total amount of investment or estimated investment within the voluntary carbon market last year, and it was something around $10 billion or so. Was that right?
Mm-hmm. Yeah, exactly. We tracked a number of funding transactions, specifically into project developers, whether it's equity, project financing, carbon purchase agreements, and in total, we estimate that the announced transaction are 10 billion, and potentially, of course, way more, as a number of these transactions don't have announced amounts. And so potentially anywhere between 10 to even up to 26 billion is our estimate of the total funding that went into the space, which is a record year relative to where 2021 data came up on.
And where are these investments going? Like, I mean, who are the players that are putting forward these investments, and what are they investing into? Yeah,
a lot of them still, the majority of the funding goes into nature-based project, as we touched on. There's a lot of buyers' preferences moving to that direction, whether it's corporates publishing nature-positive commitments or reappreciating the importance of forest protection, conservation efforts as well, a drive towards removal, something that we've seen also, and nature-based projects offer a more cost-effective solution relative to carbon dioxide removal technologies. So that's one area certainly prominent, consistent with 2021 as well. The marginal increase in investments this year came into cookstoves projects, which we touched on. We think that that's on the back of the fact that people realize the fundamental economics of developing cook stoves and investing in cook stoves are quite attractive relative to where market prices are today. And certainly cook stoves provide a social impact element as well, which buyers kind of care about and want to support indirectly through the carbon element.
Yeah, sure. And I mean, that increase in attention towards cook stoves, do you think that was partly to do with the erosion of trust in the market towards REDD+ projects? There was a fair bit of negative press that came through last year and just recently this year too. Are people moving more towards cook stoves because of that? And also cook stoves being a similar price point a lot of the time. Is that a trend, or is that something that came a bit later?
Yeah, it definitely came a bit later, I would say. Of course, one of the watershed moment in this market has been the Garden article that a lot of people have seen and started to through that started to question the integrity of some of the REDD+ project. The funding activity that we commented on is certainly something that was a bit isolated relative to most recent events. And so it's just, I think that the key drivers of the cook stove interest came on the back of the realization that a lot of funding went into nature-based already and was going into, and the market of nature-based project developers was getting very competed. And so by virtue of looking into the next attractive investment category, I think people got drawn into the cook stove category as a result. Going back to your question on who is investing in this market, I think one of the things that we realized is that there's an increasing appetite for investors or predominantly commodity traders and intermediaries to back project earlier into what we call the carbon project development curve. What the carbon project development curve is simply what it stands for is a reflection of the fact that the earlier you back project into, the more risk you're taking because of the volume risk, market risk, political risk as well, backing these projects. And so by virtue of that, you have a higher investment expectation as well. So the funding is moving earlier stage, which is a strong sign of interest that there is in this market. And certainly, I think a symptom of the fact that people are realizing that it's more competitive to get funding secured and volume secured early on into this project life. So that's what's happening. By virtue of that, I think the kind of people that invest in this market are people that want to stomach the higher risk and higher potential, and also are comfortable in underwriting potentially what are emerging market risk and political risk. If you think about all the uncertainty that still exists related to Article 6 regulation, that's a big bet that a lot of people still take as they invest. And so the kind of investors we see tend to be more nimble investment firms. We saw the emergence of carbon streaming companies. There's a big ecosystem in Canada that's starting to form. And then commodity traders are still quite active in the space. And to a certain extent, the emergence of impact investment funds that are also interested in allocating into impactful projects as well.
Okay. No, that's really interesting. I mean, as these investors and buyers are moving further up the development curve, and we'll probably put a little visual on the video of this as well so that the listener can see the graph that we're talking about, that it shows it a bit better. But as investors are moving further up this development curve and taking on more risks, does this mean that they're looking to mitigate risk by looking at established developers in the market, developers that have already got a proven track record, that have developed projects, and so inherently will have a little bit less risk in developing a project?
Yeah, that's a really good question. I think the trend is certainly moving to that direction. And as I said, you're taking a lot of risk early on, so you want to be backing teams that have had experience in developing these projects, have a technical in-house expertise. They're not kind of outsourcing that necessarily through different consultants, and can really manage the process in delivering successful, carbon delivery over time. So yeah, there's almost this perception of like land grab. Somehow, like the very large established players are getting a lot of attention, and there's this long tail of new entrants or smaller developers, very localized and regional, that don't quite get the same amount of investment attention somehow. Of course, I think from the investment community, it probably is an opportunity to look deeper into some of this long tail and perhaps pick one or two that are really building a lot of expertise and, might just need that capital to be able to get to that next stage. And so from an investment perspective, it's a really interesting thesis that I think a lot of investors may want to consider down the line, provided the fundamentals of this market continue to be strong and, we continue to see a lot of demand and prices to go up.
Yeah, I see. And so there have been some, sort of landmark deals, I guess you could say, in the last year. Would it be worth pointing out a few of those that are mentioned in the report, some notable ones?
Yeah. Different types. As I said, there's been some merger and acquisitions. Certainly the carbon sink acquisition by South Pole was a notable one. There's been quite a few also in the US. For example, Chestnut Carbon, Forest Carbon Works, which are US developers, had received an large investment from Kimmeridge as well. In terms of the other acquisition we've mentioned, New Forest, which is a forestry asset management firm, had been acquired by Mitsui and Nomura. And then in terms of the other one in Canada was Radical, which was a Canadian developer, which had been acquired by BMO, which is the large institutional player in Canada as well. So that's on the acquisition side. In terms of investment, I'd say the largest one we saw is certainly something atypical that we don't see. It's been over $1 billion asset acquisition by Anu, a portfolio from the Forestland group. It's 1.8 billion actually. And there was a timberland portfolio, which, if you've been tracking timberland transactions in the US, they tend to be quite large. But I think what was interesting about this one is that they explicitly mentioned carbon as a key driver of that interest into that. And then we continue to see quite a few equity investments into developers as they're trying to professionalize, build new teams, expand reach. And I think that will translate eventually into more project financing on the back of those equity investments.
I see. And so these trends that we're seeing in the last year or last 2 years, are we expecting to see these continue into 2023, namely things like market consolidation, the expansion of developer portfolios? Is that something we're expecting in the next 12 to 24 months?
In terms of financing, certainly we will probably expect a level of consolidation, as we talked about. There's probably going to be a slowdown in financing activity, we think, on the back of the fact that the prices of carbon credits this year have been slightly more compressed relative to the beginning of last year, certainly. So the investors probably will need to restore a little bit more confidence in the fact that these projects may be able to deliver the revenues in the future, as prices are expected to potentially go up. We still will see some interest in nature-based projects, just given where bias preferences are directionally and are expected to go, given the guidance on a focus on removals, certainly, but also this nature-positive commitment and biodiversity as a result. We saw the strong interest there, and certainly translates into the carbon forest protection work as well. So yeah, in terms of financing, certainly. In terms of other things that we are expecting in 2023, probably a continued amount of new entrants. This market is still a hot thing on people's agenda. And we see, even at Abatable, it's incredible the amount of new players that we come across that reach out to us every week. On average, we meet 15 developers. Most of them are quite early into their journey and are getting sophisticated by the day. So hopefully they will come to market and attract more financing down the line. In terms of new players, certainly more CDR technologies, like the ecosystem forming within certainly new emerging technologies in the removal space, but also in more developed economies. So Europe, it's certainly something that we'll see more of, as there's a direct framework that's going to be published. And also we saw some new interesting activity in Mexico with new players within the Climate Action Reserve ecosystem, so CAR. And then aggregators, what I call aggregators, which think of like a tech company that has been developing an MRV solution, they're now coming to market and saying we can be the project developer and work with different project implementators that are using our MRV solutions. And so they're coming with this portfolio approach. It's quite interesting. Some of the things we saw was Pachama launching the Originals program. Boomitra, which is a Seoul ag tech company, is also coming with a portfolio to market. So that's certainly a trend to monitor closely.
And all this as well, I mean, it's hard to ignore how this will play into Article 6 movements in the next couple of years. Do you have any insights into that and how developers will be participating within those emerging frameworks?
Yeah, really great question. Article 6 is a big unknown still today. A lot of this regulation is yet to be formed, and certainly more clarity will be announced on the implementation and operationalization of Article 6 frameworks, probably around the next COP and subsequent COPs. If you think about it from the perspective of developers themselves, I think a lot of them see the Article 6 convergence from the voluntary into the compliance as quite attractive, because historically compliance markets have commanded a higher price for tons, and especially if you can nest project and sell voluntary into compliance frameworks, you can benefit from that uplift. So I think a lot of developers are trying to prepare for Article 6 and are trying to engage government somehow to get a level of corresponding adjustments that would allow them potentially in the future to be eligible under these trading frameworks. We're starting to see this in the form of potentially diversification of portfolio. Back to my earlier point, some developers might be considering, being Article 6 ready with some of the new projects that they're looking to bring to market, to have this optionality to sell into higher prices framework. So that's something that is interesting, and hopefully something we'll see more of in terms of announcements in 2023 and onwards.
Yeah, and in terms of the risk that, the unknowns around how a country will adopt a new Article 6 framework, the risk that poses for developers, do you think that's also potentially behind developers looking to diversify which regions that they're working in, which countries they're working in? If you have a project situated in multiple countries, perhaps you're mitigating the risk of one country completely absorbing voluntary credits within their Article 6 framework. Does that play a factor at all in decision making for developers?
Yeah, I think it depends on the developers. Some of them have a regional reach by virtue of how they're built and organizationally structured. Some other might be harder because they've been focused so much into a region and developing government relationships in one specific region. Of course, it's non-scalable to do this across multiple regions. You need a lot of resources. So probably the highest resource developer are likely to think about it in the same way you've described it. But if you think about the long tail, small developers, not a lot of them have that resources and capacity. But funding into them could actually facilitate that. And if the investors communicate it as something that they need to be thinking about proactively, perhaps that's something that they can include in their ambition.
Yeah. And so this is the 2023 edition of the report. When are we expecting the next report of this?
Yeah, so we're going to likely publish a second report in the beginning of next year. But instead of waiting for a full year people to see some of our research, we're likely to do a mid-year check-in sometime in the summer, where we're going to be leveraging a lot more information that we receive from developers directly. And so just a sneak peek into what the year has been. So that's likely to come out July or August.
Yeah, sure. And there's plenty of content that we'll be looking to publish in the short term as well before then, including the policy paper, the most recent policy paper, which I suppose by the time this podcast episode is published probably will be already out and well received by the market. Any other key pieces that we're looking to publish in the next few months before this update comes out?
I'll say definitely check out the Developing Carbon Stories podcast that David has been leading, and it's fantastic. I think I'm very proud of the fact that we provide these opportunities for developers to speak about their stories and impact narratives from the ground to buyers and investors that might not have the opportunity to have access to them or be able to travel out there. That's one. And then the other thing that we're also doing a lot of is advocacy for corporate buyers and trying to educate them as purchaser of carbon credits. We are going to publish what we call a net zero procurement guide, which is essentially a step-by-step guide on how to think about your carbon procurement as a corporate. And we are trying to align a lot of the advocacy work with industry standards that are coming on, potentially with more guidance end of this year, whether it's SBTI or the VCMI initiative. So that's certainly something that we want to be driving more of. So check those out. It's likely going to come out in the next few weeks. And we're going to be organizing a lot more content, webinars. And we're also thinking of a potential conference in the second half of this year where we're going to be bringing some developers into a room in front of corporate buyers for them to be having a direct exchange and talk about all that's happening in the voluntary carbon market and potentially trying to contrast a bit this erosion of trust narrative that we don't think is productive for the advancement of this important instrument that is the voluntary carbon market.
Wow, so lots of content, lots to be excited about, lots of work for us. But thanks so much for joining on today's bonus episode of Developing Carbon Stories. It's a pleasure having you and very interesting to hear these insights.
Thank you so much, David. Keep up the good work. A lot of hard work, but we're onto a great mission, which is advancing this market. So thank you all for listening.